The air crackled with tension, phones rang incessantly. The trading floor was a cacophony of noise, a symphony of chaos. Traders, their faces etched with stress and determination, moved with a frenetic energy. The atmosphere was electric, charged with the anticipation of something monumental. Every ring of the phone, every shout, every frantic gesture added to the sense of impending crisis. It was a day like no other, a day that would go down in history. Traders, eyes bloodshot, barked orders into headsets. Their voices were hoarse from hours of shouting, their bodies weary from the relentless pace, yet they pressed on, driven by the high stakes of the situation. The tension was palpable, a living, breathing entity that seemed to permeate every corner of the room. Each trader was a cog in a vast, complex machine, and the machine was running at full tilt. The pressure was immense, the stakes higher than ever before. September 16, 1992. A day forever etched in financial history as Black Wednesday. The headlines screamed of disaster, of a financial cataclysm that had shaken the very foundations of the global economy. It was a day when fortunes were lost and made, when the world watched in stunned disbelief as the events unfolded. The impact was felt far and wide, reverberating through the corridors of power and the lives of ordinary people. It was a day that would be remembered for generations to come. The Bank of England, that bastion of British financial might, was under siege. Not by bombs or bullets, but by a force far more potent, the market. The institution that had stood as a symbol of stability and strength was now at the mercy of forces beyond its control. The financial district was in turmoil, a maelstrom of uncertainty and fear. The very foundations of the British economy were being tested, and the outcome was far from certain. The market, that unpredictable and often ruthless entity, was wreaking havoc. Stock prices plummeted, financial charts showed a precipitous decline, and the news was filled with reports of the unfolding crisis. It was a perfect storm, a confluence of factors that had come together to create a financial disaster of epic proportions. The impact was immediate and devastating, sending shockwaves through the global economy. The world watched in stunned silence as the events of Black Wednesday played out, and at the heart of this financial storm stood a single man, George Soros. A figure both revered and reviled, Soros was a master of the financial game. His actions on that fateful day would cement his reputation as one of the most formidable traders in history. Soros was a man who understood the market like few others, a man who could see opportunities where others saw only chaos. His name would become synonymous with Black Wednesday, a day that would forever be linked to his audacious and ultimately successful gamble. The pound sterling, once a symbol of imperial strength, was in freefall. The currency that had once been the backbone of the British Empire was now at the mercy of market forces. The decline was swift and brutal, a stark reminder of the volatility of the financial world. Currency exchange boards showed the dramatic drop in value, and the news was filled with reports of the pound's decline. It was a moment of reckoning, a time when the realities of the global economy were laid bare for all to see. Soros, the financial predator, smelled blood in the water. He was a man on a mission driven by a relentless pursuit of profit. His actions were calculated, his strategy meticulously planned. Soros was not just a participant in the market, he was a force to be reckoned with. His determination was evident in every move he made, every decision he took. He was a predator in the truest sense, a man who thrived on the hunt. And on Black Wednesday, he was hunting for the biggest prize of all. This was his battlefield, and he was determined to emerge victorious. The financial world was his arena, and he was a gladiator fighting for supremacy. Soros's actions on Black Wednesday would go down in history as one of the most audacious and successful financial maneuvers ever executed. He was a man who understood the stakes, who knew the risks, and who was willing to take them. In the end, his gamble paid off, and he emerged victorious, a testament to his skill and determination. Black Wednesday was a day of reckoning, a day when the financial world was turned upside down, and George Soros stood at the center of it all.
To understand this financial earthquake, we must first understand the fault line, the European Exchange Rate Mechanism, or ERM. The ERM was a system introduced by the European Economic Community in March 1979 as part of the European Monetary System, EMS. to reduce exchange rate variability and achieve monetary stability in Europe in preparation for economic and monetary union and the introduction of a single currency, the euro. Created to stabilize European currencies before the euro, the ERM was a pact between nations. It was designed to reduce exchange rate variability and achieve monetary stability in Europe. The idea was to create a zone of monetary stability in Europe, which would help to foster economic growth and integration among the member states. Each country pledged to keep its currency within a certain range of the mighty Deutschmark. The Deutschmark was chosen as the anchor currency because of Germany's strong economic performance and low inflation. This meant that other countries had to adjust their economic policies to keep their currencies within the agreed-upon bands, which often required difficult and unpopular measures such as raising interest rates or cutting public spending. Stability, they hoped, would foster trade and prosperity. The idea was that by reducing exchange rate uncertainty, businesses would be more willing to invest and trade across borders, leading to increased economic growth and job creation. In the early years, the ERM appeared to be a success, with inflation rates falling and economic growth picking up in many member states. But like a house built on sand, the ERM was about to face a storm. The system came under severe strain in the early 1990s as economic conditions diverged among the member states. High German interest rates needed to combat inflation following reunification put pressure on other countries to raise their own rates, leading to recession and rising unemployment. The situation came to a head in September 1992, when a wave of speculative attacks on the pound and the lira forced the UK and Italy to withdraw from the ERM, leading to a crisis of confidence in the system.
Born in Hungary, George Soros knew hardship. He survived the brutal Nazi occupation, tasted the bitterness of harsh communist rule, and emerged with a singular drive to make money and succeed. And make money he did indeed. Soros was a currency speculator, a breed apart in the financial jungle. He saw opportunities where others saw only stability. His weapon? The quantum fund, a financial behemoth that could move billions with a single trade.
Section 4, the first tremors, Soros versus the pound. By 1992, cracks were appearing in the ERM. Germany, recently reunified, kept interest rates high to control inflation. Other countries like Britain struggled to keep up.
Soros saw the imbalance. The pound, he believed, was overvalued. He began quietly betting against it, selling billions of pounds on the open market. The first tremors of the earthquake were already being felt.
Section 5, Black Wednesday, the day the money died. This was a day that would go down in history as one of the most dramatic and devastating financial events of the 20th century. It was a day when the very foundations of the British economy were shaken to their core, and the repercussions would be felt for years to come. The Bank of England, sensing danger, fought back with all its might. The institution, which had stood as a pillar of financial stability for centuries, was now in the midst of a battle it could not afford to lose. The stakes were incredibly high, and the pressure was mounting with each passing hour. They bought pounds, desperately trying to prop up its value. The bank's strategy was to flood the market with pounds, hoping to drive up demand and stabilize the currency. But this was no ordinary market fluctuation. This was a full-blown financial crisis.
Interest rates soared to a staggering 15%. This was a desperate measure aimed at making the pound more attractive to investors. But the high interest rates also had a crippling effect on the economy, making loans and mortgages unaffordable for many. But Soros, sensing their desperation, only increased his attack. George Soros, the man who would become infamous for his role in this crisis, saw an opportunity to profit from the bank's vulnerability. His quantum fund began to sell pounds in massive quantities, betting that the currency would continue to fall.
It was a financial war of attrition. Each side was determined to outlast the other, but the odds were increasingly stacked against the Bank of England. The financial markets were in turmoil, and the uncertainty was causing panic among investors and the public alike. On one side, the might of the Bank of England, an institution that had weathered countless storms over its long history. The bank was deploying every tool at its disposal, from interest rate hikes to direct market interventions in a bid to defend the pound. On the other, The ruthless efficiency of Soros's quantum fund, a well-oiled machine designed to exploit market weaknesses. Soros and his team were relentless, using sophisticated financial instruments and strategies to maximize their gains. And on that fateful Wednesday, the pound finally broke. The relentless pressure from Soros and other speculators proved too much for the Bank of England. The currency plummeted, and the government's efforts to stabilize it were in vain.
Britain withdrew from the ERM, its currency in tatters. The financial world reeled. The decision to leave the European exchange rate mechanism was a humiliating defeat for the British government and a clear signal that their economic policies had failed. Black Wednesday, they called it, a day of financial carnage that would forever be linked to the name George Soros. The events of that day would have lasting implications, not just for Britain, but for the global financial system. It was a stark reminder of the power and unpredictability of the markets, and the vulnerability of even the most established institutions.